My name is Mike Florin, and I'm the owner of Low Cost Mortgage. Today's your weekly update for December 2nd, 2024. In the last few weeks, rates have come down a little bit of downward pressure. There's a few different reasons for that. Some of the nominations that the new administration is offering up for different positions in the cabinet, the market is taking it really well, therefore downward pressure on rates. Also, we just left the Thanksgiving weekend. Thanksgiving weekend always has a downward pressure on rates. In fact, every 3 or 4 day weekend typically has a slight downward pressure on rates. Right now though, seasonally, there usually is, from the end of October all the way through the end of December, this nice downward move that typically happens with interest rates. We might be seeing that, we might not be, but it is usually there. With that being said, the loans that we're getting right now, we're only locking with lenders that float down, unless it's a very short period of time. Then we'll lock loans that don't. It depends on the speed of the different lender or the different investor that we're going to send the loan to. But regardless, that's the position that we're taking, is we're expecting rates to keep going down until the end of December. And then right around the first week of January, so they just start coming right back up again, right? Now, with that being said, rates right now. So if you go to lcmloans.com/rates, you can search interest rates on the same tool that I have. I have a little bit more detail than you do, but you know, we can run different scenarios and talk about different rates. But in all reality, we're going to go VA. Where are you at roughly? Okay. I would say if you're going to go to the par rate, and the par rate is no discount points, origination points or anything, you're approaching mid fives. Not quite there yet, but you're getting really close. And if you're doing about 1 point of discount or so, you're in the low fives or so. Check your email. You're going to see the exact rates APR scenario that's there. But this is a typical vanilla scenario. I'm going to change that to FHA. And vanilla, so I don't want to give exact rates, because if I do, then I have to get into a bunch of disclosures. And it'll take me way too long to say this FICO score with this down payment with this blah, 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 right? So I just talk generalities. Check your email. You're going to be able to see a specifics in that rate update email. All right, so if we go to FHA, you're looking, oh wow, for the first time in a while, FHA is slightly worse than VA. You're still approaching mid-ish fives, but you're kind of in the middle-ish, high-ish or so. 1 point puts you definitely in the mids with that investor. What about this investor here? 1 point or so puts you in the lowers. So yeah, I'd say FHA is slightly worse than VA today. And typically FHA is slightly better than VA usually, but today is just a little bit different. But we should see a trend downward most likely through the week. I mean, there's not much data coming out this week to really affect rates, except we got a jobs report tomorrow, which is USA Jolt. And then we've got Fed speeches. We got some ISM data coming out on Wednesday. Yeah, really not much else going on. Non-farm payrolls on Friday. That's going to be a pretty big one. So Friday we'll have a decent jobs report that'll swing rates up or down based on that. But yeah, so with FHA is middle-ish. I want to say on the higher end of the middle-ish of fives, and then with 1 point you're right in the middle-ish of low of fives, somewhere in there. We switched to conventional at a 5% down scenario. Then we're going to look at ballpark. Let's see what we got here. Ballpark mid-ish sixes for a fast investor. If you have a super clean file with again, no origination, no discount, 1 puts you very, very low sixes with that one investor. Let's pick another one. Another one, yeah, mid at par, and 1 puts you really low sixes. So check that rate update email. That's going to right there cover the specifics of, hey, this scenario does this scenario does that. Now remember, on the rate update email, we do keep it pretty simple for you. And what I mean is we're just picking one generic scenario. Now, if you want to search the scenario for your borrowers, go to lcmloans.com/rates, plug in your criteria in there. It's going to show you an interest rate that's slightly rounded up. And the reason that we have that rate slightly rounded up is really simple. We don't want the borrower to see something that they might not be able to get. Some of the investors that are really cheap, we exclude from that search tool, but more than half of our loan volume goes to the cheap investors. And I have an extra little bit of buffer built into the rates that you see on the search tool. So just know, if you're searching rates on the search tool, typically government, VA, and FHA, maybe an eighth, maybe a quarter lower, depending on the scenario. It just kind of depends or so. Maybe an eighth, maybe a quarter in rate or so lower. And then conventionals, fairly close, maybe an eighth lower depending, maybe a quarter, but probably closer to an eighth, again, depending. But conventional is going to be much closer than Govy. Sometimes we have a cheap investor that's 3/8 better on government, but again, it just depends on the scenario. And if you can't work with that cheap investor, I don't want everyone to see the cheap rates that they can't work with. That's kind of like a bait and switch, and I just won't do that. I did launch a new page. It is a manual update that we do once or twice a week, and it's for VA rates only. All right, so if you go to our main website, go to interest rates, there's going to say VA rates, and I plugged in different scenarios there. A purchase, a rate term refi, which is called VA IRRRL, and a cash out refi. Now, some caveats to VA in relation to refinances, because those are going to pop back up. Realtors, I know this really doesn't matter to you all that much, but you need to be able to know this so you can coach your buyers later. Typically, if a VA buyer comes in and they're buying, and let's just say rates are in the mid fives, and we know historically they've stabilized in the low fours or so, and that's what they were before the pandemic. Well, that means we're anticipating a refinance into the future, which means right now, if they're mid fives, then we don't want them to buy down the rate. They want no discount, no origination costs in there, because they are going to refinance with an IRRRL. An IRRRL stands for its IRRRL, Interest Rate Reduction Refinance Loan. Now, there's basic rules to the IRRRL. It needs to have about 7 payments made, and the rate needs to come down at least half a percentage point or so. But if we're currently in the mid fives, and rates before the pandemic were 4.25 or so, I was doing lots of loans at 4.25 with no cost or so before the pandemic, and you're looking low fours. Well, that's more than a 0.5% interest rate difference. So that means that every buyer that's buying on VA, they are most likely going to refinance later with a VA IRRRL. In fact, VA loan is the best loan you can get if you're a disabled veteran, by far the best loan. But in all reality, scenario dictating, we just know what general trends are, and I'm just going to talk general trends. Your scenario might be a little bit different, depending. I don't think not much is going to go on, really. You've got chugging, we're chugging along, we're doing deals, and like over this last weekend, I think I got 5 or 6 in, and it's Thanksgiving weekend. We're supposed to not be that busy, but put a lot of deals, or a few deals came in anyways. But anyways, my name is Mike Florin. Hope you guys are doing good. December's are usually really good for us. It's not our slowest month by far. It's typically one of the better months that we usually see. Hopefully you guys are out there doing the same thing. Go out there and find some deals. Finding them, just find the buyers. Oh, that's so easy. Lender said find the buyers. Think about your leverage points. Think about that for a second. Rates are on the downward trend. And if somebody's rate sensitive, you might be able to get them off the fence if rates are downward trending all the way through December. Typically, I do a lot of locks between Christmas and New Year's. And that's because typically the rates are the lowest. So when I say go find some deals, go kick your old book of business, see if anybody was off because of rates. Maybe bring them back around saying, hey, this may be a good time to start looking again because rates are going down. Demand is also low because it's the holidays, and demand is low, rates are coming down, and they might be able to afford it, / afford a bigger house, / actually get a house because there's not that many buyers out there competing for it. So anyways, Mike Florin, Low Cost Mortgage. Have a great day. Talk to you later. Bye.